Good evening, everyone. From Chicago, it's Thursday, May 7th, and this is CB3 Live on Today's Markets. I'm your host, Charles Brown, Portfolio Manager with CB3 Financial Group. This is episode 9, and we are so glad that you've decided to join us tonight. Not just me, but all of us. This is a unique community. We're 9 episodes into this. We're growing every single week. And I like to say that our mantra is, adversity is inevitable, but misery is a choice. And those of us in this group have decided that we're not going to be miserable through COVID-19 and through this recovery period. We're going to choose to focus on the good and the positive. There are plenty of places you can go on the internet and on TV to hear negative news, but this broadcast every Thursday at 7 Central is designed to bring you positive news on Corona America, the U.S. economy, and various stocks that we're seeing are in a good position to improve our net worth. While we wait for everyone to join, I'm going to give you our first poll for the evening. This is a similar question to one I ask every beginning of every episode. What is your greatest anxiety? COVID health issues? Non-COVID health issues, my family, job security, or portfolio losses? And while you're filling that out, I'll tell you a little story here. I had a client that was talking to me, and he said, you know, there's a couple good things about this COVID-19. I've noticed that when India went on lockdown, I was suddenly not getting any calls from the Canadian Revenue Agency that they're going to issue a warrant for my arrest. I'm sure you guys have gotten phone calls like that from these crazy overseas places trying to fish for your money. People keep asking me, so is COVID-19 really that serious? Well, here's my answer, and listen up. Both churches and casinos are closed. Whenever heaven and hell can agree on something, that's pretty serious. Okay? All right, what do we got here? We've got nothing for COVID health, 33% on non-COVID, 67% on my family or job security, not worried about portfolio losses. Okay, I get it. We'll give it a minute or so more. And then I'll publish the results there, and then we'll move on to tonight's agenda. Got some news for you guys tonight. We are stepping up the production values, we think, in this program. And over the next couple of weeks, we're going to roll out some improvements that we're going to be pretty sure you're going to be excited about. I'll tell you about that as we move through the program tonight. So we're at 20% now on COVID. 17% non-COVID health issues as far as greatest anxiety, 67 my family job security, and that makes total sense because we really are past the point where COVID is strictly a medical story. It's now a medical story, it's a political story, and it's a financial story. We've got one listener who's got portfolio losses. I get that. I definitely get that. I'm going to go ahead and close the poll, so if you're getting ready to answer, go ahead and do it now. And no more. I'm going to show the results. There you go. So tonight's agenda is the same one we've had from the first week. Let me say hi. Hey, Andre. Good to see you from New York. Just had surgery. Hey, I hope you're going to recover well, buddy. Thanks for tuning in. Charles, Justice for America, Justice in America. Thank you, sir. Tom, glad you're with us from Wisconsin. All that cheese up there. Our 4 topics every week: Corona America, the U.S. economy, CB3 investments, what we've invested in the last week or 2 weeks since our last broadcast, and then new trade ideas. Now, those of you that are logging on that are not clients, that's fine. We've got a lot of new people every week. We're happy to have you here. I'm a portfolio manager. As I said in the intro, we manage millions of dollars for clients. We've got people tuning in tonight from 4 different time zones. Really glad you're here, and just hope you get something out of it. Might be for your own portfolio, or maybe you're just checking up to make sure I'm still managing it for you. So here we go, guys. Hey, Pete from Wisconsin. Good to see you, buddy. Thank you for being here. So President Trump's coronavirus message is it's time to move on to the economic recovery. And I am with him on that. When I first came on here on March 19th, it was a pretty grim time. In fact, the bottom in the market was only 4 days in the future. We didn't know that at the time. But basically, he's saying, look, the cure can't be worse than the disease itself. And so I'm going to step you through, you probably hear some of this in the news, but I'm going to give you from 18 to 20 sources that I follow what I see is happening. First of all, I want to mention that the president, it's interesting that we're meeting here on the 9th episode. This is a national day of prayer. And whatever your belief system, it makes sense to just pause and reflect. That you're even on this call likely means you don't have COVID-19. And that's really important because you've been spared. And all of us on this call have been spared. We don't know what the future holds, but in my opinion, we know who holds the future. So this is a day to give thanks that we're able to meet here and talk about the issues of the day. Who else we got? We got Keith on. How's it going? Chris, good to see you. Thanks, guys. President Trump said the White House task force is going to remain in place. So one day he says he's going to shut it down, and then I think there was a ton of political pushback, and he decided to keep it open, which is a good idea, but it's no longer focusing on the number of cases, which I'm not going to even tell you like I did in the first 8 episodes. We're going to focus on the reopening and what this means about getting the economy back on track. But obviously developing the vaccine is still a big part of the story. In my opinion, let's look at the 5 big things that this administration did to keep this epidemic from being any worse. When the virus struck, the administration got to the point where we are now the #1 testing country in the world. 6.5 million tests, actually close to 7 if I looked at the data just a few hours ago. Number 2, safely getting back to work. Now I realize this safely is a controversial word. Many people think it's not safe to do anything tonight. We're going to address that. But in my opinion, we are safely, depending on what part of the country you live in, getting back to work. He and I believe that the best economy in the history of the world is going to get back, and it's going to be at all-time highs. It's not going to be 5 years. It's not going to be 3 years. It may not be by Labor Day, but it's going to get back because this is a situational outlier in human history. We have had pandemics before. We've survived every one of them. The last major one was over 100 years ago. Number 4, relief is already here. $3 trillion, and Congress is meeting now to talk about the 4th and 5th recovery packages, okay? And then early strong action, keeping flights out of China coming into the U.S., keeping European flights just a few days later out of the U.S. So global macro social distancing by keeping planes out. All of those were positive. The epidemic or pandemic is not equal across the United States, which is why one solution to close down America did not work, and one solution to reopen it will not work. For instance, the lowest amount of COVID cases are in Alaska, Montana. We should have viewers on from Montana tonight. How's it going? Hey, Gary, good to see you, and Julie. Alaska, Montana, Hawaii, Wyoming, and Vermont. Now, you might notice that they're either red states or they're small states. Hawaii obviously is a blue state, but it's isolated. The states with the highest amount of COVID cases, New York, New Jersey, Massachusetts, Illinois, no surprise. Illinois has had 68,000 cases, almost 3,000 deaths. The reality is that this could have been much worse had the administration not taken this action. So let's take a second poll because there are some crazy things going on as we move into this recovery period. All right? So, second poll here. Which is COVID crazier? I have to keep my questions shorter. They go off the screen. So, which is COVID crazier? A hairstylist being arrested. Now, this happened in Georgia. You might have heard the story. A New York City volunteer taxed. This is somebody that came in, several people that came in from out of state, stayed in their hotels, volunteered and went back, but earned some sort of stipend and had to pay New York state tax on that. Number 3, prisoners being released into the public. And number 4, no COVID counties in lockdown. Remember from my earlier episodes, 25% of the counties, 1 out of 4 counties in the USA, have no COVID cases. So is that crazy? No COVID counties in lockdown. What do we got so far? Prisoners released to the public. That's 100%. All right? Doesn't surprise me. I'll give it a few more moments here to finish out the poll. We got somebody from Texas. Whoever just said, thanks for showing up here. I don't think we've had anybody from Texas before. Glad you're here. We got 100%, folks. I'm going to show the results. I don't think we need to continue this any longer. So 100% of the people say releasing prisoners from public. Well, and into the public. No kidding. So here's some good news. Moderna, I haven't mentioned them before, received FDA approval to advance its COVID-19 vaccine candidate into phase 2. Now, when we first started doing this, we were talking about phase 1 and Pfizer moving through that, and Gilead. But now we've got Moderna. It's stage 2 with the FDA. That's a big deal. Eli Lilly, a company that we own, full disclosure, is teaming up with a Shanghai-based company, that means China, to co-develop a therapeutics antibodies for potential treatment and prevention. Now, that's not in a stage 1 or phase 2, but it means there's a partnership between the U.S. and China. Obviously not the China government, it's a private entity in China. So 5 governors in the U.S. have decided we are going to open. These governors are from Wyoming, Nebraska, Arkansas, Iowa, Missouri, and they are all Republicans. So here is the issue. Here's the issue. We have a red-blue divide. I mentioned that the last 2 episodes. It's going to become even more poignant in this episode. So we've got states that want to open up. Remember, 25% don't have any cases. Now, here in Chicago, and y'all just sit with us. That's my y'all from being a Southerner. Sit with us just a second and try to imagine this. Dr. Jay Glinzer, former candidate for a congressional office, has looked into this and has substantiated that $64.8 million was invested in McCormick Place. Now, those of you that aren't here don't know what that is, but think the huge hospitals that were created, the offshore boats coming into New York, because all these people are going to need these cases. So $64 million was invested in our huge convention center to turn it into a hospital. All right. 29 patients were treated. Now, I personally know a nurse that knows someone who works there. I can't mention names, so it's third hand, but I know this nurse very well. And she said there is no way to dispute that a tiny number, 29 is the most accurate, were treated. Now, I said, are you sure you don't mean 2,900? Because you get this vision in your head based on what the media is saying, that there's 10 or 12,000 people and they're waiting to get in and not enough ventilators. WGN, the largest radio station here in Chicago, found that there was $7.5 million in staffing specifically for McCormick Place. Folks, this is not right. It's just not right. And that's why when our governor says, well, these sites just haven't been fully reported yet, we're going to see over the involving months here that there is a huge discrepancy on the number of cases. I am not downplaying. I know that a dead body is a dead body. But the reality is, folks, here, this is not unilaterally an epidemic across every single county of America. It's just not. Michael Levitt, you haven't heard of this guy either. 2013 Nobel Peace Prize winner in chemistry, teaches structural biology at Stanford, one of the most liberal schools in the country, okay? But he says these lockdowns were ineffective and pointless and an overreaction based on his 30 years as a science professional. He said the data just wasn't there. The data just wasn't there. And because of that, and I'm looking at a map now, and by the way, that's one of the improvements. I might as well just say it right now. We're going to be going to an interactive system where you're going to be able to see live the data that I'm looking at. I know you guys get it on Friday. Those of you that are on our mailing list, which is a little plug. If you're not on our mailing list, I don't solicit business. I just send you the slides, okay? CB3 at cb3.com. Just ask. We'll put you on our list. You'll get these slides. But starting next week, you'll be able to see them live. But this map of the U.S., shows a huge amount of green states which are reopening, partial reopening, and then there are ones with little bars on them where they're reopening where they haven't even met the criteria. Now, is that civil disobedience? I guess we're going to be exploring that over the next 4 to 6 weeks. But the reality is that most of the states on this map have very few cases, and the ones that are brown that are still in lockdown, and Illinois is one of them, well, they're not opening up. In fact, we just heard from our governor today that churches in the greater Chicago area may not open for a year in what's called phase 5 of the rollout. Just doesn't seem right to me. The Federal Reserve, usually I talk about monetary policy when I'm talking about the Federal Reserve, but one of the governors, there are 12 of them, spoke up 3 days ago and said, look, many people in his district, this is St. Louis, are way more concerned about their economic situation than they are getting sick from COVID-19. If this shutdown lasts into the second half, many of them say, we'll be wiped out. We'll be filing personal bankruptcy and we'll lose our businesses. Now, that's in place with tomorrow being probably going to be, more than likely going to be, the worst jobs report in the history of the U.S. We're expecting 30 million jobs in the monthly April unemployment report, which happens the first week in May, unless the first week is the first, and that's why it's on tomorrow, the 8th. Now, here's the difference between this and the Great Depression, and you just got to take this in, folks. This is an aberration in the employment picture. This will not last. In the Great Depression, no one knew when the economy was coming back. The Federal Reserve didn't have the power that they just did weeks ago, flushing trillions of dollars through the U.S. economy, effectively backstopping, word of the day, backstopping this country from failing, to give hardworking men and women and hardworking business owners a chance to reestablish themselves. Now, you've probably heard in the media that President Trump is not too happy with China, but let me read from you a quote from the Five Eyes Intelligence Consortium. China's government has engaged in an assault on international transparency to the endangerment of the rest of the world's countries. So concluded the Five Eyes Intelligence Committee Consortium, the United Kingdom, Canada, Australia, New Zealand, and the United States. That doesn't sound to me like it's just President Trump versus Premier Xi. That sounds to me like we have a major transparency gaffe and indeed treachery. And part of the reason I am doing these is because so many people are scared. They're living in fear. And I'm here to tell you that because of the way the market is performing, I can tell you that there are enough players out there that know this is situational, this is temporary, and this will be handled. I think one of the biggest changes that's going to happen out of this is that the U.S. is going to look to rip their supply chains out of China, their medical supply chains, their shipping supply chains, their electronics supply chains, their semiconductor supply chains. You're going to see major companies in the U.S. and Japan, which is the world's third largest economy, saying, yeah, you know what? I don't think we're going to do this anymore. We're going to pick back up, move it to our country, and yes, this global world power, the globalists, are going to see a huge run out of their mindset and more into nationalistic mindset, which is to protect each country and its own best interests. If the Chinese are upset by that, they're the blame for it. As we move forward with COVID-19, you're going to see that it's going to be, in my opinion, the biggest political divide in the history of our world, bigger than World War I, World War II, the Civil War. It's huge. They'll be talking about this for 100 years. And the reason I am here every week is because I want to encourage you that living in fear is not the answer. Getting the data, having confidence in your future is how we're all going to get through this. It's how we're all going to get through this. Okay. Let's, I think I closed the results here, yeah, because everybody was 100% on the prisoners. Um, let's talk about the stock market a little bit. I'm going to publish this poll, and I'm going to tell you a story here while you guys are filling out this poll. So this week I was walking out here in Glen Ellen, which is a suburb of Chicago, and I come up to this homeless guy. It's a new guy. There's several that kind of live on our streets, but this is a new one. And I had a conversation. I said, so are you hanging in there? You doing okay? He said, well, I'll tell you what. Until last week, I had it all. And I took notes because I don't want to get this wrong. I had plenty to eat. My clothes were washed and pressed. I had a roof over my head. I had TV. I had internet. I went to the gym. I had a pool. I said, well, gosh, I can't go to the gym. I don't have a pool. And I could go to the library. I can't go to my library. I was working on an MBA online. I had no bills and no debt, and I even had full medical coverage, and I am dumbfounded. Dumbfounded. And I felt sorry for him. Candidly, I felt sorry for me. And I said, what happened? The divorce? Alcohol? Drugs? And he said, bleeping COVID-19. What do you mean? Well, the government of Illinois kicked me out of prison last week. So that was his story. What kind of country are we living in when the state puts you in jail for walking in the park with your child because it's too dangerous, but lets criminals out of jail cells for their health? That is crazy, and that kind of decision, that kind of policy is not about health. All right, what do we got over here? Unexpectedly strong, and I see why. I would like to think that's because you've been tuning in here, but I'll be humble and say it's one of the reasons. Only 11% unexpectedly strong. Fools. Okay, let me put these results on the screen. Yeah, 89% of you unexpectedly strong, and you see why. Good for you. Good for you. Good for you. We just can't live in fear, guys. We can't do it. In Chicago, the biggest interstate here is the Dan Ryan. It's 18 lanes wide, 9 on each side. When I venture out on the Dan Ryan, I go with 2 cell phones, 2 GPSs, 2 water bottles, energy bars in case I get stuck, especially in the winter, tires that are filled up, and a full tank of gas. So I'm prepared. But if a storm comes along and my son has invited me to come see his new gerbil, I may cancel. I may. But if my son has an engagement party, I'm getting on the Dan Ryan and I'm going there. I know what the risks are driving at 80 miles an hour. For those of you in Chicago, I'm sure you're stunned to think people would drive 80 on the Dan Ryan. But if you live in Cincinnati, think I-75, 71, Norwood Lateral, Atlanta, I-75, South Florida, the Turnpike. It's the same everywhere. We know the risks. We're willing to take the risks. This is no different. This is no different, folks. We calculate the odds. We move on with our life. All right, let's get to the U.S. economy. I normally read the stocks in a certain order. I'm going to reverse it tonight. The Russell 2000 small cap is down 23%. The Dow is down 16. The S&P is down almost 11. You ready? Drum roll. The NASDAQ is up for the year. 0.1%. As I'm looking at the market here overseas, it's another 0.6%. So we're going to make that a 0.7. Did you hear that? On March 23rd, the NASDAQ was down 37%. It's up just under 1% today, 6 weeks later. So either the person, that says on the poll, 10% of you guys said, fools, but most of you said, nah, you see why now. The market looks forward. The economy looks backward. The market, for the most part, is full of realists. The economy, the people doing these reports are full of pessimists, in my opinion, and I've been doing this 30 years. We remain in a secular bull market. Here's some good news just from today. The FDA approved Moderna's vaccine candidate for phase 2. I just told you that earlier. I want to say it again. PayPal up 14%, describing April as its best month since its IPO. I'll have more on that later. Lyft up 22%. Who would have known? Uber just came out after the market closed, up 24.5%. Shocking investors. Now, full disclosure, we don't own those last two, and they have been beaten down since February 19th. I understand that. But if there were not optimism back here, they would still be beaten down, and that's not where they are. So the weekly private payrolls, which we've been following in episodes, starting in episode 3, I think all the way through 7, came out today, minus 20 million. And I'm not laughing. I'm sorry. That's very serious, especially if you're one of those jobs. But the reality is the market isn't surprised by that number. The market believes this is situational, and that the people in this country that are in small business, that are hiring people in larger businesses, are going to say, we are going to get past this. We're going to find a way, whether it's through Zooming everybody from their home, or people sitting 6 to 8 feet apart in meetings, and some people on Zoom and some people live. They're going to figure it out. We figured out after the Civil War, we figured out the Revolutionary War. We're going to figure this out, folks. We're going to figure this out. And I will be here telling you how we do it. And since I'm a portfolio manager, I'm going to focus on how we can make money in this change, this dramatic trajectory change of America. The week advance came after the total initial claims. I mean, I just have to give you these numbers, 22.5 million. We never saw numbers like this in the Great Depression. Never. So again, why is the market doing this? Well, it's pretty obvious. And I've said it, and I'll keep saying it. Here's some good news. The NFL announced yesterday they're going to play a full season. They're going to show up in September, and they're going to play the Super Bowl in February in Tampa. Could that change if there's a huge outbreak? I suppose. They'll figure it out. But they're going to play a full season. Whether that means there are going to be crowds there, or even will it mean that the people that have tickets will show up, we don't know. But they're not going to cower beneath a rock. Here's another shocking number for me. This is just 3 days ago. There is a Chinese automobile manufacturer, probably like what we have here in the States, that announced a 1% increase in China auto sales for the month of April. Now, they were down 43% starting in January because it hit there first, but up 1% this quickly? Haven't you been hearing from the press that a recession takes 18 to 25, 27 months? We're not seeing that, folks. Could it still happen? It might, and if it does, I'll tell you the truth. But we're not seeing it. We're just not seeing it. We don't trade the economy. We trade the market. Those of you that are clients and have been on this broadcast have heard it, but because we have so many new people, let me see who I got here. Hi, Nellie. Hey, Julie. Hey, Tracy from Indiana. And Andre again. Thanks, guys. Thanks, guys. Let's see what else we got going here. All right. Those of you that are new, let me just say this. We don't trade the economy. We trade the market. It's called the stock market. It's not called the economy market. It's not called the fear market. It's not called the gloom and despair market. It's the stock market. And if stocks are going up, we need to buy them. Okay? Jeez. All right. And again, I'm rolling this out real soon this month because so many of you have said, we really want to see these slides in real time. I used to send them, but then you're like fumbling trying to watch this stuff. So we're putting together essentially a video studio to bring you state-of-the-art productions every Thursday night on what's happening, the recovery in this country, and how you're going to be able to make money from it, okay? So I hope this is the last time I have to say on this chart, but you'll get it tomorrow anyway. So this chart that I'm looking at shows the last 7 recoveries. And the one that we just were in, as you may know, from 2009, March 9, 2009, through February 19th, 2020, was the longest on record, but it was the lowest percentage gain. Why was it so unloved? No one really knows that. But it's my position that because that enormous 11-year rally was so unloved, that the real big money in the market, which is not me, it's probably not you, But the huge hedge fund traders and institutional traders said, you know what? This is situational. This is an aberration. This March 23rd low, we're back in. And I think that although we had a bear market that lasted, 2 weeks? We're going to see this next bull market be even more impressive than the one we just experienced for 11 years. We're in a secular bull market. Last week I talked about secular versus cyclical. I don't want to repeat it here. Go back and watch that episode, please. But it's important that you understand the difference between secular and cyclical. All right. I monitor earnings reports when we're in the prime of earnings season. We're kind of winding down now, but it's still, fairly early, I should say. We wind down pretty much like the first week in June to the last week in May. But 66% of companies are beating their earnings estimates. You might say, well, that's phenomenal. Well, that number is normally about 73% at this point in the cycle. And as far as beating their actual profits, remember, we've got above the line sales and then below the line, which is actually profits. That's 62%. That's normally about 68%. But it's not 40. It's not, on the other side, 38. Now, when I'm sitting here in July and telling you what the profits are, it could be much worse. But again, it's my belief, based on the way the market's behaving, that the market's already figured this in. They figured this into the pricing. They're not going to be surprised. These are billionaire traders, investment firms, Goldman Sachs, Harvard, Yale institutions. You know how much Harvard has? Like $87 billion. It's crazy in their endowment fund. Okay. All right. What do we got here? So at the end of this section, I'm just telling you, we're done with the bear market. Stocks usually often go up in earnings season. Those are the numbers I just gave you. And as of today, May 7th, the market is behaving if not all, the bad news has been priced in. It's important you understand that. The market is behaving as if the bad news is already priced into stocks. That's what I'm seeing. Let me take a couple questions here. Hope the bears will be there. Yeah, I hope so too, Tracy. Okay, anybody else? I got a quiet group tonight, but you're glad you're all here. Glad you're here. All right, let's go on to stocks. Now, again, those of you that are clients, we're talking about things that we hold. Several people have said to me, well, you sure talk about winners more than losers. Well, there's a reason for that. The winners we're holding, the losers we get rid of. I'm not going to come on here ever and say, yeah, we've been nursing this losing stock for 6 months now and it's really bummed me out. That doesn't happen. That's not how I trade. We cut our losses on losers and we hold on to our winners. I do mention bad mistakes in judgment, and I've got some tonight, some doozies. So I'm trying to give you a balanced view, but here's what we're seeing for our clients, and you can take notes for your own portfolio or just listen to what we're doing. So my biggest winners over the last 5 to 6 months, certainly this year, have been the NASDAQ and the NASDAQ Biotech. So the way that I invest, the NASDAQ is ticker symbol QQQ, and the NASDAQ Biotech is IBB. So as a trader, the way the market's structured, I can either buy a mutual fund, which has tons and tons of stuff in it, but I don't do that for lots of reasons. We can cover that in another issue. But I have certain exchanges or asset classes that I like, and a whole lot of what I like is technology and biotech, and that's already in the NASDAQ. So I buy the NASDAQ. I then can goose that a little bit by buying biotechs, or I could buy medical equipment suppliers and sell biotechs. All right. So I've got the NASDAQ, and I've got a little bit of bump on the biotechs, but then I've got individual stocks to bump on top of that. So there are 11 sectors in the S&P 500. I can't recall ever being in all 11 sectors because they don't always do well at the same time. In fact, they never do well at the same time. So when people say, well, I'm just going to buy the S&P and hold it, you can do that. It's not as successful a strategy as going with the winners. I mean, you can bet on all 32 teams of the NFL, or you can just focus in on the Patriots or whoever is the great team now. I guess with Brady not there, it may change. So maybe Tampa. So that's the two big winners that we have that we continue to hold long term. A stock that we like a lot, and this will play into the strategy I just described. So we got NASDAQ, we've got IBB, which is biotech, and then an individual stock is Dexcom, so that's DEXCOM, ticker symbol Delta X-ray Charlie Mike. The reason I like them is because they are working towards an artificial pancreas solution for type 1 diabetes and expanding that into type 2. Diabetes is a really big deal in this country, and part of it is because of lifestyle choices and part of it is heredity, but it's not as big a attention grabber as heart disease and Alzheimer's, lung cancer. Those are big ones. But Dexcom is a really good player. We've held it for a while. It's doing real well for us. EPAM Systems, that's ticker symbol Echo Papa Alpha Mike. This one is crazy. Their revenue comes from doing tech work for financial services, media, travel, hospitality. At one point, they dropped almost $100 from their February high down to the March 23 low, and we still held it. So this is disclosure saying just because a stock drops 40% doesn't mean I'm going to sell it. I have to look at the context of why it dropped 40. Did the overall business solvency, the business strategy, the set of books, because I am a fundamental trader to some extent, but mostly I'm a technical trader. Did any of that just totally get whacked out between February and March? No is the answer. So we held. We like EPAM a lot. Another one, EverQuote. We bought this at 24, trading 51, although we have had as much as a 60% drawdown in this stock. Why? It's just one of those high-tech stocks that if you're, they've rallied 30%, I guess it looks like about 30%. Got it on the screen over here, just in the last 5 weeks. But basically, they provide quoting systems for insurance companies. And guess what? One of their clients, won't mention names, but is a huge auto insurer. I don't know about you guys, but we got a refund. We got a refund from our auto insurer saying, we haven't been paying any claims, so we're just going to give this money back to you. I guess only mutual companies can do that, but at any rate, they haven't been hurt as much because people are getting new quotes, because if their insurance company isn't giving them rebates, they need to be looking at another carrier. So what I'm trying to tell you is they're always winners. They're always winners in anything that happens. If I haven't made the point yet, you guys put your pencils down, because I just need to talk to you and tell you this. You can't live in fear. I am here tonight telling you what I'm telling you because I believe it's important that you keep an upbeat attitude on the medical situation, on our lifestyle situation, which we will get back to, and on your financial situation. There's no way that I would be here tonight if it were not for your feedback and your appreciation in the first few episodes, or I wouldn't have come and done it. But it's earlier than that. It's not just that. I would not be here right now on episode 9 if my media producer had not said to me at 4 o'clock on March 19th, you got to go on the air tonight. You got to go on Facebook Live. This is like 3 hours before we did it. You got to talk to people. And I wouldn't be here tonight if he had not said that to me. But I would not be here tonight if Dave S. in June of 2008 hadn't called me and said, Charlie, the market is falling apart. Bear Stearns is out of business. It looks like Lehman Brothers is going to go out of business, and they did. You have to go out and you have to talk to people. That prepared me for all of this. Had I just lived and cowered in fear, I couldn't be here tonight. But the truth is that it's not just that. If I hadn't gotten an email the night of December 8th, 2001 from an Alice Breitenbach, I wouldn't be here tonight, because she encouraged me to start a business, to help people financially, and we built this business, and that's what got us here today. But I wouldn't be here tonight if it weren't for Paul J. in Hinsdale. Paul was my next door neighbor, and he kept saying to me, we moved into Hinsdale and said, you got to come down to the Chicago Board Options Exchange. There's really some cool stuff going on. And I went down there, and my eyes just were glued on the trading floor. And it was at that point in my life that I changed from being a music producer, commercial music producer, to a trader and investor. Picture your own life and these kinds of things that have happened to make you who you are. And there may have been some uncertainty in them. There was uncertainty for me, but we didn't get to where we are sitting here all together in fear. And even if Paul had been there, none of this would have happened. I would not be talking to you tonight if in 1948, a timid 32-year-old man, after his Kiwanis meeting ended, if he hadn't walked up to the piano player and said, "Hi, what's your name?" She responded, "My name is Jean Mustaine." And that was my mother. And this is Mother's Day this weekend. And just so you know, this show is not only about finances. It's not only about health and what's going on here. This is about just living a better life. And sure, money's a big part of it. But think of all the people in your life that got you to right here, deciding to be part of a community that wants to just be better. Just be better than the rest of the world that's so dour and fearful and critical and condescending. We're not that here. We are going to be upbeat. We're going to be confident. We're going to work on the facts. I still use 2 phones, 2 GPSs. Good Frank, fill up a gas, and I don't go into the city unless I'm prepared. We're going to be prepared, and that's a big part of what we do in this broadcast. But our attitude has to be positive. All right? Sorry if that went on too long, but I really think it's important. Last segment is always new trade ideas. Let me put the last question up here. My next investment will be a growth stock or fund, a moderate stock or fund, a conservative stock or fund, a CD, or I will hold cash. And while you're answering that, let me check for questions. Tracy, what are my thoughts on Roths? I'm a huge fan of Roths. Huge fan. Too much to go into right now. Real quick for you guys, there's 2 kinds of IRAs. There's a Roth IRA and a traditional IRA. Roth IRA does not give you a tax break in the year in which you contribute, but it grows, all the money in it grows tax-free. Tax-free. Unless you think we're going to be in a lower income tax bracket in the future, does anyone think that? Then a Roth's a great investment. Now, what goes in the Roth, that's another story, but Roth versus traditional IRA, huge. Thanks for that question, Tracy. I appreciate that. What else? Thomas, choose to be better or bitter. That's good, buddy. Love it. In fact, I'm going from a like to a love on that. Love it. Okay, what do we got here? We got 75% a growth stock or fund. All right. That's good. Moderate, not bad. A conservative, 13% CD or cash, that's okay. Because if you're living in fear, you don't want to go into the market. You want to go in when you're mentally ready, because the market can and does cause losses. You guys know I'm available, CB3 at CB3.com. You got any questions you don't want to ask here in the chat box, you want to ask me directly, I don't have a clock. I don't turn it on and start charging you, okay? So let's move through this. New trade ideas. So I told you I would be candid with you on the mistakes I've made. Here's a big one. I've traded this stock twice since its IPO, and it's named PayPal. Ticker symbol Papa Yankee, Papa Lima. PayPal is a payment system, duh. We all know that. They announced that the current environment has rapidly accelerated the transition to digital. Yes, you can pay giving someone your credit card number or typing it in over a web browser, but with PayPal, it is a quicker process. I missed seeing this transition 2 months ago, 3 months ago. The past month has seen unprecedented demand, says the CEO. Their branded transactions were, I hate to even read this, 43% in April above what they were in February. May 1st was the largest single transactions day for PayPal in history. They added 7.4 million net new customers. I don't know about you, but I find that staggering. April revenue up 20%. Don't believe what you hear. I am not saying that if you're a small business owner or you work for a small business that these are terrible times. But there are pockets of prosperity, and as a portfolio manager, I have to seek those out. I will be buying PayPal on a pullback, but it has been, I'm looking at it on the chart right now, straight up. Great holding. We do hold Visa in CG, our capital growth program. We hold MasterCard in CG, capital growth, and then Visa in our growth and income portfolio. But PayPal is the really strong one. Here's another one, Twilio, but I've traded over the years. Just was so volatile, we got out of it. Twilio is up 36%. You probably never even heard of Twilio. Twilio, if you have any kind of communications like phone calls, text messages, they're creating the technology that interfaces the apps with you. If you're taking an Uber or a Lyft, you call or message your driver inside the app, you're using Twilio. So they are an intermediate communication entity, what's known as an API, an application transfer interface. So we like it. We're going to watch for a pullback. Great company. Here's yet another one that I've been talking about for 3 weeks. I still haven't bought. Earnings came out today through the roof. Peloton. Peloton makes exercise equipment, and they have integrated videos where you can watch at home. I called my, I won't mention their name, my gym today to see if I could get my membership suspended so I didn't have to keep paying for it. And I heard the Andy Griffith theme, you know, we're going fishing there with Andy and Obi. Yeah, so they're gone fishing there. I don't know what they're going to do. They're going to have to come up with a solution that sanitizes people that come into their gyms, and they're going to have to hire more staff to keep every piece of equipment pristine, or people won't come back. And I'm betting they're going to do that because there is tremendous investment in these huge gyms that are all over the country. But Peloton is doing some really good things, and I think they're an amazing company. Here's a company that I'm glad I didn't buy. I was talking about Disney a few weeks ago. Who would have ever thought? I mean, do you think Bob Chapek, who's the CEO, saw that, you know, he probably thought, well, we're diverse. We've got an amusement park in California. We got one in France. We got one in China. We got one in Florida. That's our biggest. There's no way all of those could go down in one shot. Well, no, that's not true. But who could have modeled for that? So what's keeping Disney going, and I suggested this back in episode 5, is that their subs growth or subscriber growth, on their cable system, streaming system, pardon me, that shows my age, 56 million in 3 months. That far eclipses what Netflix did. Now, Netflix still has more subscribers, but it took them a lot longer. Disney is going to change as a company to being a for-play entity, and it's going to be a subscription-based model rather than transactional-based, which is what their theme parks are. I'm following Disney, not a buyer. So we're ending here. I think I've covered everything. My phrase for you tonight is there's nothing new except what's been forgotten. There's nothing new except what's been forgotten. And maybe you forgot 1987. I was there. I still remember walking in and my wife said, Tom Brokaws on the news telling us the stock market just crashed. And we thought it was the end of the world. And it did change things. I was still writing music for TV commercials back then, and it changed everything at the ad agency level. So I remember what that was like. And that's part of the reason I'm doing this. Many young people, you know, in their 20s, they were, you know, in middle school before we had the last bear market, you know, 2008, 2009. The young ones just don't remember this. We've been here before. We're going to be fine, people. COVID-19 has moved from being a global pandemic, it still is, but it's now a financial story. And that's what we're covering here for you. with optimism, with hope, with truth, and we're so glad you've decided to be part of this community. It is my deeply held belief that we will not only survive this pandemic, but that America, all of us, will come out stronger on the other side. I hope you'll keep tuning in. We've got some really exciting things in store. Next week, I'm going to have my first guest. He's a millennial financial advisor. A lot of people said to me, you know, you're kind of an old guy. What do the young people think that are in your business that are advising? Well, we're going to ask one. And then a few weeks from that, we have a young lady who runs a nanny business in Boston. So we're going around different parts of the country. And we're going to see how she's handling it, because her business is very much in people's health space. Are they wearing masks? How are they taking care of children? How has COVID-19 changed that? And I'm going to get some opposing viewpoints as well. So it's not just going to be me. It's not just going to be me in my pro, upbeat, optimistic hope here. Who else? Well, you'll have to see. But it's somebody that will have a varying viewpoint. Let me check news here. How about Square? That's SQ. They did have earnings come out. I see that. Thanks for the question. I just got on my desk that there's a hairdresser from Texas online. I don't know who you are, but we're thrilled you're here. We had Square for the longest time. I don't want to, they're not on my list right now. We like Square technically, because mainly I'm a technical trader. It's not something I would look at as much as I would look at PayPal. Thanks for the question. Let's see what we have here. Show the results. So we've got a growth or stock fund. So I left this open. 82%, moderate stock, 9%. Nobody's buying conservative, and 1 in CDs. Okay, that's fine. You guys are awesome. If you want the slides from tonight, if you're on our mailing list, you'll get them tomorrow morning. I'm hopeful that next week, if everything works right, that you're going to see them in the presentation, okay? I'm going to ask you, if you like what you see, would you like our Facebook page? It would mean so much to me. Would you like it? Or even hit the little heart button, which means you love it, because it gives us some traction. And I would also ask if this message is one of hope and optimism that's been blessing to you, that's been helpful to you. If you would just tell your family, tell your friends, there's no cost. You know, there's no cost. Just come on and be part of the family here that's listening and asking questions and learning and just being upbeat about what we're going to be able to do here in America going forward. I think I've gotten everything. Hey, Dave, good to see you. Any thoughts on Peloton? Just mentioned that. Your question must have come in before I mentioned Peloton. Yeah, I can get more specific on that. Probably still going to be on my radar next week. All right. Thank you, Tracy. Tom, thanks, buddy. Anybody's question? If I missed it, I'm scrolling up, but sometimes I've missed it. If you've got a question, ask it now. Let me put the results up here of the poll. I'll wait for it. So next week, we are back here Thursday at 7 o'clock. We plan, if everything works according to the equipment installation and everything, to have our first guest. I have a financial advisor in another market that I'm hoping to bring in, and you guys will be able to ask questions. Just like you ask me, you'll be able to ask them. We think it's going to be exciting. Again, this is the place for optimism about the future of America, guys. Thank you for being here tonight. I don't see anything else. Charles, thanks for the good word. Pete, thank you for the good word. Love you guys. I will see you next week.